Hello and welcome. You're watching KYC, and today we're going to look at Alembic Pharma. They've come out with numbers for Q4, but outside of that, doesn't look like a very enthusiastic set, and it's a stock which hasn't given returns to investors. And therefore, if you're an investor, it becomes extremely crucial for you to understand what to do and what the outlook also suggests. And therefore, we will break this down on KYC and get a management interview. So, four things or four factors that I want to know with regard to the company. I want to first start off with US tariffs. US tariff around 30% odd with regard to the top line of the company comes from the United States. And I have Varsha Chandani joining me as well. So just quickly introducing her. But so US tariffs, that's going to impact the numbers for Alembic Pharma for sure if that were to come through. There's also a higher quantum of US FDA inspections which are going to come along. So both of those are big risks, if at all we can call it that. And we will try to analyze whether those risks are real or not, especially with regard to Alembic Pharma. Now, the India pharma market outlook, for Alembic in particular, the numbers have not been good, and we'll talk about that. And therefore, what's the outlook like from the domestic side of things? One is there is headwinds on international, but even on domestic, the numbers don't seem too good. The third piece is with regard to margins. Now, margins have softened sharply from nearly 30% in FY21. They are down to 15%. And therefore, the question will be, can they recover? And we'll try to answer that as well, because we're not seeing that recovery as of now. And last off, just with regard to outlook on pricing, both US as well, more US than domestic, but pricing will hold the key or one of the factors as to whether the margins will actually recover or not. But let's not delay this further. Let's talk about Alembic right off the bat. I'm going to start off with what the company does. It does two things. One is it looks at formulations, and then it looks at APIs, which is active pharmaceutical ingredients. Active pharmaceutical ingredients, as Varsha never stops reminding me, is something which allows every pharma company, every manufacturer of medicine, with the key component of that medicine, with the key repair, right? So the key component of repair of a crocin for a headache will be its API. So just to kind of dumb it down for people like me, Varsha gives us this example. Now, the company has 3 R&D facilities and 5 manufacturing facilities that it operates out of. Now, let's look at how the company has evolved in terms of segments. This is how the growth for the India business revenue has been. It's just gone up from 1930 crore to 2,340 odd crore. So really no growth, at least on the Indian side of things. They've recorded an 8% growth even for Q4 with regard to India, and it's the 20th in the India pharmaceutical market. It holds a 1.5% market share. Now, in terms of the market share increase, there's plenty of bandwidth available, right? But can they actually do it? Well, it's not visible, at least on the numbers as of now. And that's what you need to know as one of the key risks. Now, this is with regard to how the US business is evolving. So if India is not doing well, can US do well? But that also doesn't seem to be the case, at least with regard to the numbers that you're seeing on your screen. And this is one of those reasons as to why the company is not also giving returns where investors are concerned. But Varsha, why don't you talk to us about products? Because that will give us a flavor as to whether the future outlook looks better or not.
Yeah, so Harsh, starting with US business. Now, for this quarter, the US business grew 20%, which is actually good. Considering the history that the company has. So 4 products were launched in Q4 and taking to total of 163 products which have been commercialized. And they have 15 products which are under pipeline and which is expected to come in FY26. So this is the key thing that one should watch.
But last year as well, Varsha, for context, they launched 14 products.
Yes, and
so
I think
this year it's another 15.
It's another 15 products.
So again, the question will be, can growth kick in?
So now as per the con call, so they are expecting, double-digit growth when it comes to every segment of theirs.
Okay.
Your India business or, your API and your US business as well. Now, we need to wait and watch whether management will walk the talk or not.
Sure.
And, their ongoing capacity expansion in oral solids will meet rising demand when it comes to, US and ex-US market. Now, coming to their animal health business. Now, it's a very small part of business, but it has grown from 232 crores to 430 crores. And they operate in livestock, poultry and companion animal segments. And the 3-year CAGR growth in this animal segment is 24%. Now, the point is you're seeing this double-digit growth because it's a very small segment for them and a new segment for them. Let's talk about their API business. Now, we all know that there has been pricing pressure when it comes to the API business, and company is no exception there. And that's why you're seeing kind of degrowth when it comes to API business. But in Q4, they reported almost 4% growth, which was led by increase in volume. So please note that there has been pricing issues, and pricing issues are actually going on, and that's the reason we are seeing some little cool off when it comes to API business. But yeah, there was a volume growth. And they filed 5 products in Q4 FY25, and the cumulative filings takes to almost 140. And their continued focus is on cost efficiencies to remain competitive, and capacity expansion projects are under process when it comes to API business. So overall, these are the key segments where company performs, and the main highlighting segment over here would be the US business, which actually grew 20%, and India business, where the growth has been tampered off like 8 to 10%, and this should go beyond 10% when it comes to India business.
Yeah, sure. So that's how we look at the businesses. Now, to give you perspective again, and very broad level perspective, 70% of the business comes from US and India. Am I right, Varsha? And if I were to break up the business as a whole on a product basis, formulations is around 80% and API is just about 20%. So that's the broad breakup on how the business is. But let's go across, look at our parameters and look at how the numbers are stacking up. We've seen individual businesses and how those numbers are looking. Now let's look at it from a broader perspective. Income statement, balance sheet, return ratios, cash flow. That's how our rating parameters as always stack up. Shareholding, street cred, street coverage and valuation. So that's all our 8 rating parameters, as you would call it. Now let's first start off with the income statement, and I'll take it across to Varsha, who'll handle it.
Yes, thanks for that. And now, so if you look at the income statement, there you go. So now the growth has not been that good for the company. Now, there are key reasons why company had faced challenges. So one is the challenges in the oral and respiratory baskets were due to higher base in previous years, and which had actually impacted the overall growth for the company. And there were market challenges when it comes to India business, and that's the reason why it is growing only 8 to 10% due to subdued performance in certain therapeutic segments, which has actually impacted the overall growth, and that's the reason you're not seeing that kind of good growth when it comes to overall financial statements. The US business remained challenging due to competitive intensity, and that has been reflecting in the in the numbers. And of course, the impact of pricing erosion on certain products and competitive landscape have affected profitability, and that's the reason there was a time when company used to enjoy 18 to 20% of margin, but that has been tapered off, and that has come to 15%, which company expects to go to increase the margin, but they're going to take time when it comes to 20% of margin. Now, API market was actually experiencing volume growth, but prices were still falling, and that's the reason the end product prices have gone down, and that has affected the sales for the company. So overall, Harsh, I would say because of the pressure in APIs and because of the pressure in India business and US business, we are not seeing that strong financials that was expected.
Fair point. And I want to quickly pull out the margin graph as well. It's an interesting one because, Varsha, what we've seen is from FY18 to FY21, margins have gone up, and margins were always above 20%.
Exactly, yeah.
Thereafter, after margins have crashed, they found it very difficult to recover. So they've recovered from the FY23 level in FY24. But thereafter, they've really struggled to improve it any further.
That's because of the pressure, pricing pressure, product pressure, and US pricing erosion that has affected these kind of margins.
Correct. So all of those factors impacting, and we did highlight in what we should know about this company,
yes,
whether pricing is actually improving and whether margins are actually recovering. And we'll ask, or rather we have asked the management this question. So you will get an answer and some flavor with regard to margins. But this is a key piece to look out for where Alembic Pharma is concerned. One is the top line growth and the other is margins. If either or both of these recover, you could well see a very strong performance on bottom line as a result of that, and warranted the margins to go up because they have traditionally been above the 20% mark. So if you look at that number, traditionally been above 20%. So no reason why it shouldn't go back up. Whether it can or not is really the question. Let's look at the balance sheet now, and nothing much to talk about here. Borrowing number is roughly 1250 odd crore. They've done some bit of capex this year, which should kickstart in terms of contributing to numbers from next year onwards. The capital is fairly strong compared to the debt. It's around a 5,500 crore in terms of the equity shareholders funds, and in terms of the market cap as well, 17,000 crores. So a thumbs up on that count. Decent amount of cash on the balance sheet as well. Varsha, cash flow.
Yes, so now look at these numbers. In FY24, they had a cash flow from operation of 803 crore. But in FY25, it's only 88 crore. And the net cash flow, if you see, it's a negative when it comes to FY25. Now, let's see the reasons why sudden, drastic change when it comes to 24 versus 25. One of the reasons is they have been building inventories as they've scheduled multiple launches. And that's the reason. So even US inventories are also high, and they have to keep backup APIs. That API is a main salt. So they have to keep a backup APIs and other products, and that's the reason you're seeing higher inventory, which has actually impacted cash flow because your cash is stuck in inventories, number one. And they also build up inventories on the anticipation of the good launches, which are actually expected to come in few months. And having said that, management is expecting this inventory to taper off over the few quarters. The second highlighting reason why you're seeing only 88 crores of cash and net cash flow as a negative because of the receivables. So if you see for a long time, the receivable days have been around 70, 80 days, but now this time it has gone up. Now because there were some new launches where the collection days are a little higher, and that's the reason your cash is stuck in receivable days, but they are expecting this to normalize and go back to their normal level, which is about 70 days. Now these are the main two reasons, Harsh. Your cash is actually stuck in inventories and receivables, which has impacted your cash flow, but management is expecting this would taper off in near future.
Interesting. Okay, so that's with regard to cash flow. I would want to see that cash flow number for FY26. We're giving this a neutral, hoping that that cash flow number for FY26 shows some bit of improvement, if not too much. Let's look at return ratios, and both, as expected, return on capital as well as return on equity are showing a downward trend, and that is because of that margin erosion that we've seen, which has been sharp. You see how your return on capital is now come off from that 20+% to just about 11%. Can it rebound will be the question. For the moment, you're not seeing any visible rebound. Varsha.
Yes, so I would actually talk about, Harsh, over here, shareholding pattern. Yes. So when it comes to promoter holding, almost 70%, and they've maintained that, so skin in the game, good thing. And FIIs, kind of a decent stake when it comes to FIIs, but DIIs, it's almost 16.5%, and public has almost 10%. So overall, this is a good thing, good skin in the game, good FIIs and DIIs exposure. So overall, a good rating when it comes to shareholding pattern.
Okay, excellent. Let's look at street cred, therefore. uh, it's not done too well on exchanges, at least. Over the last year or so, the returns have been very muted. It's been a tough kind of an environment for it. In fact, the last 5-year absolute returns is just about double digits. So not even a 20% return that we've seen, something like a mid-teens return over the last 5 years. What you want to see is better returns and that turnaround, but we're not seeing that. But what could well happen as a result of this is, because the stock hasn't done too much for a very long period of time, if you could start to see a turnaround, the stock could move up. So that is the possible positive, but for the moment, it's all looking grey. So therefore, we'll give this a thumbs down. Street coverage?
Yes, so there are 7 buys, 5 hold and 1 sell when it comes to Alembic Pharma, but the return potential, if you see, it's about 10%. So I won't say that great, but I mean, buy holding of 7 and sell holding of only 1, I think that's kind of good thing, not as bad. But yeah, upside, I would say only 10%. Maybe, you know, Street is expecting that companies should post a good result when it comes to financials that we have been seeing.
Yeah, and there could well be that upside,
yeah,
if that were to play out. But Varsha, I think you're better placed even to cover valuation. So why don't you do that?
So exactly. So if you see now, Alembic Pharma is trading at, if you see the trailing 12 months P, trading at 30x, but Oro Pharma, Zydus Life Sciences are trading much below, like almost 20x. Sun Pharma I can understand, because you know the company is going into specialty segment, and
correct,
that's the reason, one of the reasons why market is giving a premium, and of course Sun Pharma kind of management that the company has. So I would say Alembic Pharma kind of little overvalued compared to, you know, Oro, Zydus and Sun Pharma trading at 36x. So yeah, valuation kind of.
So we've given it a neutral. Therefore, let's quickly look at all the parameters, sum it all up. There you go. That's how it stacks up. Not a very impressive performance per se. A couple of green shoots, and if you're looking at even the next, yeah, absolutely. So nothing much to be too enthused about. It's just about a 4.5 on 8 on our KYC rating. Now, in terms of outlook, Varsha, if you can quickly sum that up for us, what's the outlook like, so that we can go to management thereafter and hear it from them?
Yes, so basically they're developing specialty drug pipeline for India, and they're also exploring opportunities when it comes to injectables, which is a new area for them. And they are expanding when it comes to product portfolio in US, and also strengthening presence when it comes to, you know, Canada, Latin and Middle East. And they are expecting double-digit growth when it comes to your India business, US business and also API. But overall, US business is one thing that you need to watch out, and of course company going into injectables, and they're coming up with peptide block also, that is the semaglutide or GLP products or the diabetes products, which are the key things to watch, you know, Harsh.
Okay, so all of that on the roadmap, but let's hear it straight from the management. We spoke with the Managing Director of Alembic Pharma, Mr. Shaunak Amin, both Varsha and myself, and here's what he had to say regarding growth prospects going forward. Listening to the first piece of that conversation. In fact, the first piece of that conversation was more with regard to how tariffs and US FDA could impact the company. Listen in.
Yeah, so I think maybe I'll just take a few extra minutes to go through a couple of the things that have happened in the US, which is ex-business related totally. So obviously one is, you know, with the tariff side of things, I think at this point, we don't have a clear directional view on this. We're talking to our US partners all the time, and they haven't given us any indication in terms of whether they'd like to pick up some extra stocks at this point in view of, you know, any impending tariffs that might be put in. I think we're quite confident that both the governments are talking to each other, and it seems to be, you know, progressing, but we don't have a directional view on this today. I mean, to the fact that whatever Q4 products, whatever Q4 growth we saw in the US, there's no element of pipeline stocking or or customers picking up extra stocks in lieu of any impending tariffs that might be coming in. So that's on the tariff front. The second bit, what you're talking about, is on the executive order that Donald Trump has signed in terms of looking at self-reliance from a US drug supply chain per se. So when you look at that, I think it's more you got to look at it in a total context of pharmaceuticals, where generic is a small component from a value point of view, though from a volume point of view, they're a large component. The feeling we have and the sense we get is, I think this order has been targeted, or it's been put forward from more of a global perspective, which includes innovators as well as generics. But the sense we are getting is that directionally it seems to be tilting towards the innovators rather than the generics at this point in time. But like I said, we have no firm view on this. The third bit in terms of onshoring manufacturing in the US, which is a part of this order. I think at this point in time, it's too early to speculate on onshoring the US. Yes, it's a universal truth that to manufacture anything in the US, let alone pharmaceuticals, is significantly more expensive than it is in a country like India. So that obviously is a reality of life, not just for pharma, but for all sectors per se. So keeping these things in mind at this point in time, we don't have a directional view on this that I can come out and say, look, we're working towards something, or we see either direction. We're quite neutral on this. Now, coming to the FDA inspection front, so a benchmark, a landmark, a part of what Alembic has always done is we've been very high on our FDA and regulatory compliances. Our track record, I think, is one of the best in the industry per se. And that's been a strategic initiative since the last 10 years that we've been working on. So in view of the higher FDA inspections coming in, we actually welcome this move, and we're quite happy and we're quite ready to face any inspection at any time. So we view that as a positive for the sector.
And Mr. Amin, I want to also understand how pricing is evolving at this point. That's been one pressure point, especially US pricing. How has it shaped up in Q4, and what's the FY26 outlook that you can give us?
Yeah, so I think how it's shaping up is it's become quite stable from where we were a year and a half ago. So we see this as a stable environment per se at this point in time. Going forward, we hope that we expect the pricings to stay the same. We don't see any further erosion coming in at this point. Does it go up or not? I think it's hard to say. We have some new launches lined up this year. So I think hopefully a combination of one-time purchases plus some new launches plus some stable supply of running products should help us, maybe best case scenario, help us move the margin a few notches. But like I said, it's like I said, we don't give a forward guidance on these things.
Right. Hi, Mr. Amin, Varsha this side. Just wanted to understand basic financials. The operating margin, which is at 15%, now this has been in the range of 13 to 15% in the last 3 years. So what is the scope of expansion when it comes to your margins in FY26? Can we see maybe 50 basis point or 100 basis point increase when it comes to margin, because you're coming up with your peptide plant as well, which will help in the expansion of products, and of course you talked about the product mix as well.
Yeah, so I think on the margin front, if I recollect clearly, the last time I was here, I think we were quite clear that we want to move to a 15 kind of a scenario, and we're quite comfortable with 15 at this point in time. In terms of moving up, yes, we have an in-house, obviously, a cost optimization project running that's been running for the last year and a half. We expect this to continue. Directionally, we're trying to work towards a higher margin profile, but at this point, I think we're quite comfortable with 15 also.
What is it, Mr. Amin, that it's going to take to get that margin more towards 20? What's the headwind that you're facing, and what change will likely drive that? So I'm just trying to understand.
Yeah, so I mean, if I go into historically when we were at this 20% plus margin for a fairly long period, it was a combination of two things. I think the plants were heavily optimized at that point. We only had one US FDA formulation facility and a couple of API facilities which were running at full capacity at that point in time. So our ability to, get a product out very efficiently was high. We expect that to happen over time as the new products do kick in and the new plants do start getting filled up. So that's one part of it. The second part of this, obviously, launches. Right launches can really change your profile for a period. So let's see. We have nothing in the horizon that I can confirm or talk about today, but I think we have a robust pipeline of products. So we expect something to happen maybe in the next year or year and a half.
Mr. Amin, on the US segment, which grew 20%, you had a very strong growth when it comes to US. Now, I'm assuming this is on the back of the new launches that you have done. But quarter on quarter, I believe there's a dip, despite you did almost 4 product launches this quarter. So, what's the outlook when it comes to US business in FY26 and number of launches expected there?
Yeah. So I think quarter to quarter is a wrong basis to say whether it's moving up or down, because it's just hard to calibrate it because of new launches or because of how product moves or how the supply chain moves. So that's at this point not. I think directionally we are okay. It will keep moving in this direction. I would not want to look at it over a single quarter. I think you look at a couple of quarter trend. I think that should be the more indicative process.
See, I mean, this mid-teens growth when it comes to US business in FY26, because 20% you did this quarter.
Like I said, this quarter was a mix of stable volumes plus a few launches. We don't give a forward guidance, but I would say you can make a trend over the last 4 quarters, and I would say we're quite comfortable to maintain that directional movement.
And Mr. Amin, in terms of top line growth, you've guided for mid-teens there too. Now, and in terms of domestic as well, no substantial pickup that we're seeing. We're seeing a 10% kind of growth. What will be that lever which will catapult the growth on a slightly higher trajectory, both when it comes to the India business as well as the US business?
Yeah, so obviously, I think on the US side, new launches plus optimization, I think we expect that to continue. On the India side, I think it's more about execution and operational efficiencies that's going to drive it. We made a large investment, a technology backbone investment in the last year and a half, and we got a big data analytics package put on top of that to help us really get out the efficiencies. And as you're aware, India is an execution challenge for any segment, irrespective of the category. So we expect a lot more data to help us, dig out these efficiencies and really help us, add to our top line growth in the India business, even if the market is going to be quite, sober in the coming year.
Okay, so that's of course the conversation with regard to Alembic Pharma, and we've tried to break it down the best we can. Of course, investors, hopefully all of you found this extremely helpful. But with that, we're out of time. From Varsha, myself, all of us who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit. More action on the other side.